All right, you're on our podcast here with Got Mortgages. I'm Santi Rodriguez, aka Fund and Flips. Our guest here today, Aaron Levine, Luxury Group. Welcome.
Part two, Santi. We had a couple months ago over in Red Bank in my studio, and I'm thankful to be here and hang out. Now I get to be in the hot seat. I get nervous for this stuff, man.
You get
Like,
nervous when you're not
I'm
the
like, what?
interviewer.
Right now, I'm the one that has to answer all of the questions. Like that's the hard part. You got the fun job today, but let's roll with it and see what we can put
Yeah,
together.
let's roll with it. So let's talk about how's life going for you? What's new? What are you looking for in 2026?
I mean, I've got so many things good going on right now, right? Depending on when this episode actually goes live, I'm going to become president of my state association for professional insurance agents of New Jersey in the month of June. So that's happening right now. So a big leadership role. I'm going to be on stage interviewing some top CEOs in the insurance industry. This next coming weekend, right? Depending on when this comes out, that was in June also.
Nice.
So I've got a lot of really good things going on in my professional volunteer life because
Okay.
that's all volunteer stuff.
Yeah.
But business wise, everything is going good. We're loving the real estate market that we've got right now. We've won quite a few nice size commercial deals
Yeah.
on some new business. So the team is in high gear and everything's good. And the kids are happy, healthy, and running
Okay.
crazy and doing all the things. So all good stuff.
Good. So let everybody know what is Luxury Group? What do you do?
So Luxury Group is LG Insurance Agency, also known as the Luxury Group, and we are in the insurance business. We are an independent insurance agency based out of Monmouth County, licensed in 17 states to do business for both personal and professionals. We do everything from condominiums, small homes, construction projects, hospitality. So we'll do a condominium for $750 in premium, and then we also have construction projects in New York City where the premiums will be, well over $500,000 a year,
Got
right?
it. Got
So
it.
we get into the small, but we also are very qualified to handle some nice size, larger accounts. So we
Commercial
we
stuff.
kind of do it all.
So going back, and I've been in real estate for a while, as we know from part one. Um, what's the difference from 20 years ago to now with the way insurance is looking? Because I remember premiums were like $600-700.
I
We're
mean,
never going back there, huh?
it's funny. I saw one of my team members sent a quote out for somebody in North Jersey buying a modest, home, no big deal, and the premium came out at like $1,700. I'm like, this is amazing. I'm like, Mr. So and so. I'm like, this seems like an amazing deal. It's under $2,000 for the year. We're in really good shape. I'm happy to see something under $2,000. He's like, I found something better. I'm like, define better is a whole nother conversation
Right.
because we do things a certain way. We want to make sure the coverage is set at an appropriate level,
Right.
and we're not going to cut corners to save $50.
Okay.
But like when I see something for a modest home under $2,000, I'm like, that's a win.
That's
And you're
that's
right.
huge win. Yeah.
10 years ago, 15 years ago, that would have been like an $800 premium for what then would have been a $600,000 house. What's now, $1 million house to see where premiums are at. But we work with a lot of normalized premiums in the $3, $4, $5, $6, $7,000 range for regular homeowners, especially if we're working in the coastal plains, trying to do more of that, which we do a lot of coastal property.
Okay.
But there's things premiums are all over the board, and yeah,
All over the board.
we've all taken a big hit on premiums over the last couple of years, but I think we're starting to see a little bit of a plateau in the market.
That's great.
Um, Cross your fingers. We see that market get a little bit soft, and we can find opportunities to save, but save appropriately, not save haphazardly, where we're cutting corners,
Yeah.
we're lying to the insurance agent to get a better deal, which you're probably gonna ask me about it, but happens way too often. I'm like, all right, put that in writing
Right.
because if something goes wrong, here's the email, Mr. Adjuster. This is what the insured said they were doing with the house,
Yeah.
saying that they're living in it, but they're really not. And then they're renovating it and something happens. I'm like, the insurance company's like, bye-bye, we're out.
And that's a great point you bring it up, because a lot of people don't know what they don't know,
Right.
right? And they think that, hey, if I don't say this, I'm going to be okay because my premium's lower, but you're going to get denied when it's time for you to put in a claim. Is that what you're seeing?
It's always about having an appropriate premium, right?
Okay.
We want to provide the appropriate value for premium and coverage,
Okay.
right? But if you're going to commit fraud, because not telling the truth is the same thing as committing fraud, and the insurance company denies you when you have a claim, well, was it really worth committing that fraud, not disclosing the truth, and saving a couple of bucks in order to not have the insurance when you actually need it?
Right.
Right? Like there's a fine line between tweaking the truth, right? Bending, fibbing, and straight out committing fraud and lying and knowing you're going to do something else with the property or with the business or with your sales or whatever is going on, and actually what the truth is. And then you get into trouble and you have nobody there to help you. Right. That becomes a problem.
Yeah, that's a huge problem because now, you know, and I've seen clients and I've heard stories and I've read stories. People are literally going to jail for this. Like it's serious.
There's, you know, taking fraud up to a whole nother level. Like there's RICO lawsuits throughout the state of New Jersey and in New York for insurance fraud, right? A lot of it is medical fraud, body shop fraud, right? We see on Instagram people driving in front of people and then slamming on the brakes and like, oh, you hurt my neck. But, you know, there's dash cams now everywhere.
Right. Yes.
Right.
Yes.
So everything's on camera. You can't hide from it.
Right.
So it's like, you know, we think it's harder to commit fraud, but fraud has actually increased over the last 20 years, even with more visibility. So fraud is, there was a factor, I think they said fraud accounts for 30% of your insurance premium.
30%.
So 30 cents on every dollar is going paid out to fraud or to fight fraud.
So what you just said to me is that if we had less fraud, our premiums would get lower.
Yeah.
Wow.
But that's everywhere, right? Yeah. Look at it in retail. You know, you see videos all the time of people going in and smashing windows and looting, right?
Yes.
Fraud, theft, vandalism, criminal activities in general.
Right. Yeah.
Cyber crimes, right? We insure against a lot of criminal activities.
Right.
From theft and certain things, but fraud is a whole another set of it.
So I love where you went right there, right? So someone living in the suburbs and someone living in the inner city buying the same valued house, they'll have the same premium or different.
Everything's going to be different, right? Depending on, you know, depending on coastal guidelines, depending on proximity to the neighbors, depending on the age of the structure, right? And, you know, and honestly, insuring things in Newark, in Camden, in Trenton, in certain urban areas, very difficult. A lot of standard insurance companies are not going to do it just based on, you know, there's a crime score. There's a factor as part of the rating. That's a crime score. So unfortunately, honest people in urban areas are going to pay more for insurance just because of the proximity to everything else that's going on.
To the crime. And that's a great point. And that's what I want our viewers to know, that, you know, you could buy the same house. And it's similar in my business, doing the finance. You know, somebody will say, hey, I got a 700 score too, but, you know, everybody's situation is different. And everybody's property is different where they buy it. And that's a key.
Well, that's funny. Like, I don't respond on like Facebook, like all those township groups and moms groups and, you know, like, oh, my insurance is too high. What are you paying? Like, you can't compare yourself to your neighbor. Right. Especially for auto insurance. Even for homeowners insurance, there's different factors. Like if your roof is 10 years old or 20 years old, your rate could have a factor, right? If your home is newer, if your credit score is better, right? If you're insuring more things in your home or jewelry adding on, like there's too many factors to compare yourself to your neighbor. Right. Yeah, that's one piece of due diligence, because we all complain about spending too much money on insurance. They're like, oh, I'm paying this. Call this insurance company. And sometimes they can do it, but are they going to do it by cutting corners? And listen, there's, you know, hundreds of insurance companies in the state of New Jersey doing business for different things. I can't have all of them. So there may be better answers out there for some people. Right. That are where there's going to be a better policy that's afforded. But we try to do our best as independent agents to have as many carriers that make sense for us to help as many people as we can appropriately.
I love it. I mean, in that segment right there, what we just talked about, to me was like keys of insurance. These are like keys that you guys need to know before you even get a quote out there.
It's you know, it's trusting who you're working with, I think is super important. Right. Just like people are trusting you to put together a high value mortgage product that's going to get to the closing table in an appropriate amount of time. You want a trusted professional helping you come with, get your insurance situated. Your lawyer,
Absolutely.
your lender, your insurance professional, right? Your
Yeah.
realtor, right?
Yeah.
You want to work with the best of the best.
Yeah.
It all works together, and then the best of the best work behind the scenes to make sure everything is seamless come to get to a closing table.
Totally agree. Totally agree. So let's talk about something that claims getting denied. What are you seeing out there that's getting denied the most? Like what I mean, I think number one would be fraud based off what you're saying.
We recently had somebody put in a claim
Mhm.
for something very similar to a claim that happened to the same house to the same people about 7 years ago. And when
Wow.
the insurance company went out, they're like, doesn't look like you repaired the damage from last time. So I'm like, throwing my hands up. I'm like, I'm not even going to talk to the insured at this point
Right.
because they got, call it $100,000 7 years ago, never repaired, did the major repairs that they claimed they were. And now they're trying to double dip on that same issue. So they got hit with a fraud department letter.
Wow.
Right. So, and that's in Monmouth County.
Right.
Right. In,
Right.
in one of our higher end communities of Monmouth County.
Right.
So it's happening everywhere. I don't know what the case is. I'm going to let that go through the insurance company
Yeah. Yeah.
and see where it goes. Like, I'm going to step out of it because like this is above my head. I have nothing to do with
Yeah.
it.
Yeah.
But I'm seeing that, and claims getting denied, right? It's small stuff. Things that have been like, everyone's like, oh, I've got mold. Okay. Why do you have mold? Oh, I've had a leak. Okay. How long has it been leaking? It seems like it's been leaking for the past 5 years. Right.
Jesus.
You
Oh
know,
my.
so those claims are hard to cover.
Yeah. Yeah.
Mold claims get denied all the time because just because you have mold doesn't mean you're getting covered for it. So sometimes there's coverage, but a lot of times mold is only covered if there's a covered cause of loss that causes mold. So you have to have an active leak that started by accident,
Got
right? Not something that's been active over a long period of time. And then the mold happens.
Got
So we see mold getting declined all the time. What else gets declined? Small claims get declined because they don't meet deductibles. People are like, when they buy the policy, they want a $5,000 deductible to save some money.
Oh.
Come claim time,
Yeah.
we're like, oh, I never signed off on that. I'm like, okay, here's your signature. You signed off. You wanted this deductible. I have all the emails saying you wanted this because you wanted to save that extra $200, and now you want to think you had a $500 deductible.
Wow.
Right. And yeah, we see a lot more policies nowadays with higher deductibles, especially when it comes to wind. So we see that, like, putting in claims is also an art. It's not
Okay.
just like, let's put a claim in for anything.
Right. Right.
It's like, is it worthwhile to put this on your insurance history on a go forward? Because
Basis.
you don't want to put a claim in every year. Repeat offenders have trouble getting insurance eventually
Absolutely.
and wind up paying the cost for it, right? They
Right.
pay the price. So you want to be careful when you're putting in claims. I think it's super important to only put in claims when you can't afford to pay for it, or if it's significant, right? If you have $1,000 deductible, don't put a claim in for $2,000. Wait till it's 5, 7, 10, and then let's put in the claim,
Makes
right?
sense.
Let's put in a bigger claim, because if something real happens, it's like crying wolf, right? If something real happens next year and you have to put in $100,000 claim, then you wasted, your energy on that first claim, and then you're going to have trouble with insurance on a go forward. So
Yeah.
I think it's super important to just be careful and speak to your agent before putting in a claim, just to have that conversation, right? Have a qualified conversation and see if it makes sense.
No, that's awesome information for people to have, and that kind of leads me into the next question, which is, do they contact you, or are they going directly to the insurance company?
No, so in our office, I want our clients to talk to us first before putting in a claim. I think it's a better way to communicate it. Like, let's
Okay.
have a conversation before we put it in.
Put it in. Yeah.
If your house is on fire, let's call the insurance company.
Right away.
and-
Yeah.
and
Let's
put the
get
claim
that
in.
done. That's a
But if
911.
it's something small, like I had a client yesterday, is like, sent me a video of water pouring out of the ceiling, and I'm like, okay, well, what's damaged?
Right.
If we just have to cut a hole in the ceiling and fix a pipe and repair the ceiling, that's not going to meet the deductible.
Yeah, it's a couple $100.
Right? Because if you caught it quick enough, you're good. But if it had been leaking for 4 days and the floors are ruined, and you've got to replace the floors on, in the kitchen or the living room, probably worth putting in the claim because you're going to have a lot of issues because the subfloor could be damaged at that point if there was that much water coming in. So you're going to have to rip up the floors, the subfloor. That's probably worth putting in a claim. But if you can catch it quick and fix it, like I had my laundry machine is on the second floor of my house.
Okay.
We had a line break, right? And there was water coming down.
Right.
What's right below it? A bathroom and a bathtub. So where was the water going? Into the bathtub.
Yeah.
So I got lucky because we had no other damage, right? It didn't come out of the laundry room. The laundry room is tile.
Yep.
So it didn't come out of the laundry room into the hallway. It stayed there, poured through the ceiling.
Right.
Right. And we got to open up the ceiling, clean it up, and all the water was coming into the tub. So I got super lucky.
That's very lucky for
Still took 4 weeks to get it fixed because you got to rip it out, wait for it to dry.
Right.
We had to put new sheetrock in. It's a process to get put back together, but it wasn't worth putting in a claim.
No.
I think it cost me less than $1,000.
You're in the business.
I don't want to
That's
put in
sometimes that people need to hear. Like, hey, I just went through this. Right. It doesn't make sense for me to put in a claim because the dollars and cents don't match up. Right. Plus, I don't want it against my record. Yeah. So when I need it, then to use it.
But then there's the other side of it, right? Mm-hmm. Is we just got noticed today of a claim that I was working on 2 years ago. 2024 was the claim. There was it was in a building. There was a major sprinkler system malfunction that caused a huge breach and a lot of water damage.
Right.
There was an exclusion in the policy that read one way. I read it a different way because that's how we wrote the policy. And so this one turned into the insurance company denied the claim.
Right.
And then we disputed the claim and then eventually hired counsel to go after the insurance company on this.
Okay.
And the insured just won $700,000 on the claim, right? Because the wording in the insurance policy was not specific enough to where we felt that this claim should have been denied.
Right.
Right. Because of certain factors in the case. But I'm like, just go after the insurance, go sue them.
Right.
Because I think this, thankfully they didn't sue me also, but I'm like, I'm reading it this way. You're reading it this way. Your lawyer's reading it this way. Let's go after the insurance company. And eventually, I don't think it went to litigation, probably through mediation and through several rounds of inspections and professionals.
Right.
It got paid. So there's the positive side, right? Everyone's like, oh, big bad insurance companies, they don't want to pay. You're right. They don't want to pay unless it says black and white, we are going to pay for this damage.
Right.
And sometimes if it's really gray, we want to err on the side of caution. And sometimes if there was, and this was $1 million worth of damage, this was worth going after the insurance company to try to get that paid. And the insurance company was forced to pay.
What I truly love is you're an advocate for the client, right?
Totally.
Because a normal agent isn't going to go through that and read through that policy for them. They're going to send them the policy and they're going to tell them contact the insurance company and see what happens. I've been there. I've been there. So for you to advocate for the client and say, I read it this way, you read it this way.
Right.
The attorney reads it. This is a fight.
This is a fight.
And now on top of it, they got $700,000.
Got $700,000.
Wow.
They could have just stepped away and said, okay, see you later, bye.
And take the loss.
But instead, they stepped up, put the boxing gloves on a little bit because it's what you got to do. And if it makes sense, go do it.
That's a tremendous win.
Because I'm just the guy in the middle. I'm the broker.
Yeah. Right.
I make recommendations. People make decisions to buy insurance.
Right.
And they make a contract between the insurance company and themselves. And then I'm free and clear to walk away. But that's not how we try to operate.
That's a great
We try
thing.
to take that next step and build that relationship because we are in a relationship building. You got to trust what we do and how we do it. And not everybody does, but that's the way it is. It's all a relationship business.
I love that. The relationships are most important when it comes to your home. So make sure you're dealing with reputable people you like. These things are important. So we were talking about, the homeowners and what it covers. Talk about what it doesn't cover.
The biggest one, there's been a lot of news lately, right? Homeowners doesn't cover flood, right? And the definition of flood is 2 or more properties, and it's got to come up from the street, right? It's got to come up from the street. It can't, from the sky falling down is rain. If there's a roof issue or a window left open, that's not considered flood. It's got to come from the ground up.
Okay.
But, flood insurance is not covered by homeowners. Earthquakes are not covered by homeowners insurance. Personal cyber related issues are not covered by homeowners insurance. People also think, oh, I own a business. If I get sued personally because of something that happens in the business, I'll be covered on my personal umbrella. That's above my home and auto. I'm like, no, that's not the case, right? Because business operations are totally separate. People running businesses out of their homes often have liability exclusions and gaps in coverage because they think they're operating the business in their home, that they'd be covered for certain things, but they're not, right? So everything needs to be covered separately. If you're running a business out of your home or you have other business ventures, you want to make sure you have liability coverage. Jewelry is always separate. And then there's a lot of smaller endorsements depending on the type of insurance policy that we're putting together that people can purchase for service line, equipment breakdown. So those are some of the key ones. And then you have to just watch your deductibles, right? What's a deductible that's comfortable for you to afford? It's like going to Atlantic City, right? How much am I comfortable losing, right?
Yes.
What is my entertainment value today? Is it $100, $200, $1,000, right? That's the same thing. What is my deductible going to be? Am I comfortable writing a check for $1,000, $2,000, $5,000, $10,000, right? And that's what it is. And then you have to worry about the wind and the hurricane deductible.
Okay.
If the policy has separate wind and hurricane deductibles on it, right? So always important to understand that, because those are most oftentimes significantly larger than your regular deductible, which will be your fire or your theft deductible.
Right. So now on those, and this is new for me, and I've been doing this for a while. So those are separate policies for earthquake? I mean, I know floods is a separate
earthquake,
policy.
like we can sell it. I mean, I think out of the 3,500 clients we have, one person has bought earthquake insurance.
Got it. It's funny.
So it's not a thing, but it's come up in conversation.
Right.
Because we had a landlord, we have a large commercial property, start asking for earthquake insurance for the commercial tenants. I'm like, we can't get it on a lot of businesses, can't buy it.
Okay.
We can sell it to some homeowners if they wanted to, but nobody's got it here in New Jersey.
In New Jersey, yeah. I mean, I think we had one, 5 years ago? And
and that's when landlords started getting crazy.
Right. So that's what brings me up to say that, because, and I'm 46. I'd never experienced the earthquake and had that first one. I remember, people close to like Jersey City, New York, they were like, hey, did everybody feel that? It was a little wild.
We do sell earthquake coverage to a lot of our building owners in New York City.
Okay.
We have some earthquake, but the deductibles on those, depending on the size of the building, start at sometimes $500,000.
Wow.
For deductible. But we're talking
big buildings,
big buildings,
big
$20 million plus in coverage.
Yeah.
So $500,000 is nothing in that case. But we do see that in New York, and then obviously out west where it's more prevalent.
You're a wealth of knowledge, and this conversation is tremendous. Loving it. It's been amazing. Let's switch topics and speeds for a minute, because I just don't want to keep hitting you with these questions, bro. Like, let's talk about we was last talking. You were telling me about a book you were reading.
Okay.
Which one are you on right now?
I just finished The Monk Who Sold His Ferrari.
Wow, that's different.
The book was recommended to me. We can trace this book back, actually. This came to me from Joe Palazzolo. He's a professor at Monmouth University, so I speak at one of his classes every semester to a group of his students. And somehow the book conversation comes up a lot lately, right? The older I get, the more I read.
Yes.
This is like where I wish I started reading more in my 20s.
Yeah, absolutely.
The knowledge that I'm gaining now would have been so much more useful. It's still useful. It would have been more useful in my 20s. But The Monk Who Sold His Ferrari, a really good story about, just giving up the fast-paced life to find yourself, right? It's a little bit of soul searching, a little bit of yoga, a little bit of Zen, and just realizing you can be happy.
I love it.
Within yourself without needing all the material things that you think you needed in life previously to support you. Okay. Right. And unfortunately, the guy who becomes the monk that sold his Ferrari almost died of a heart attack and he was working 100 hours a week. And smoking cigars and drinking every night and not sleeping and not taking care of himself, right? And so, and if we go side by side from when you were in the studio with me to now, I
Right.
think I've lost 15 pounds since then also. So
Wow.
I've been on a new health kick lately also, which has changed some things for me. I feel a lot better.
Yes.
You know, my energy level has gone up. My, you know, my blood work has gotten better. So like all the things that you start worrying about at our age now,
Right.
start
Absolutely.
thinking more about health because you don't think about that shit in your 20s.
No,
You just
not at
go,
all.
go, 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 go because your
Yeah.
body can handle it.
Right.
But now our
Right.
bodies are like starting to get old and
Yeah.
soft and, you know, it
Absolutely.
gets harder to get out of bed.
It-
We need to be healthier and focus more. So to anybody listening, if you're in your 20s, read more, take better care of your health because 20 years from now, you're going to be like, you're going to look back at this podcast episode and be like, it's true.
Yes. Yes.
So true.
It's funny. My son graduated this week, Tuesday, from St. Peter's Prep. He's off to BC, and
Love it.
I had this same exact conversation with him, and I said, "Listen, read, find other things than football, than sports, than college right now, to help feed the brain. The brain is a muscle, and you have to
Right.
feed it, right?
Yep.
Now, for us, we start feeding in our 40s, right? If you did it in your 20s, it's that much more knowledge that
Right.
you have, which would have catapulted us even more.
Sure.
Yeah, so definitely love that. I'm reading one, Seven Figure Flipping by Bill
Okay.
Allen, which has been a tremendous book. It kind of just walks you through the little nuances that you forget sometimes
Right.
in building a real estate empire. So truly engaging in that. That book I'm definitely going to look up. It makes me think about Namaste. Love it. Haven't done yoga in a while, but the last time we were in the studio too, I've since then using the AI, tracking everything. Right.
Okay.
So I've gone from 259 to 250 right now.
Okay.
Goals to get back down to about 230, 235. But I'm using it all through AI. Right.
Okay.
So it's tracking. I say, hey, this is what my weight was. Here's what I'm eating. I'm tracking my calories and putting it all together. It's
Nice.
like one of the greatest things ever. So yes, health is most important for
Yep.
us. So that's probably a great read for me as well. So let's kick back into the insurance.
All right. Go ahead.
All right. So as a client comes in, what's something they should do to protect themselves?
Just understand, right? Like, you know, and you can take your policy. I don't recommend it because then you're putting your personal information into an open source technology, but you can put it in and get a better understanding through ChatGPT, and people do it all the time. I had a client say, "Hey, I'm thinking about this. I uploaded my policy to chat and this is what it said." And then I gave him my opinion,
Got it.
right? And the opinions between ChatGPT and myself were pretty close,
So wait a
right?
minute. You're just as smart as GPT.
Or is ChatGPT almost as smart as me?
Yes.
Let's figure that one out. And it's okay to use the technology. I'm not afraid of it.
Okay.
I think we need to be careful because people get up in arms like, "Oh, chat told me this." It's like,
Right.
you know, you're trusting a robot more than you're trusting
Yeah.
a professional. And that's okay. The robot has a lot of good information, but the
Right.
robot also has a lot of bad information.
Correct.
So it's really just trying to figure out how to prompt it appropriately to ask the right questions,
Yes.
you know. And I'll use it too if I'm stumped on something. I'll be like, "Hey, you know, I need to find this. I needed
Right.
to find a code for something."
Give me a suggestion. Give me some input.
And instead of me going to the Compensation Rating and Inspection Bureau website to manually look it up, I'm like, you know what? Let me fire this in here. You know, hey, Copilot, what can you do for me? I need to look this up for this specific state, and this is the exact operation.
Yes.
And then it was able to pull that data for me much faster than if I had to go to the website myself and start key phrasing in to an archaic website that pulls the data slowly.
Yep. Absolutely.
You know, so it's good. I'm okay with it. But, you know, working with a professional and having that conversation is important. I'm going to meet tomorrow with a new prospect and I want to meet in person, right?
Okay.
And this will be our second meeting in person. First meeting in person was going over what their wish list is, what they're doing, what their revenues are going to be, what are the operations, who's involved, how are
Right.
the employees going to be set up. And now it's okay, I'm going to present, but I don't want to be like, call them up or send them text, be like, "All right, your premium's $52,000. Here's what you got. See you later. Bye."
Right. Right.
Right. I want the face to face so I can say line by line, and then we can have a dialogue
Right.
to see if I missed something
Okay.
or they have a different need or they have a question about it that we can clarify when we're together.
Okay.
So those face to face opportunities for the higher end clients, I think are so worthwhile,
Okay.
especially when there's 4, 5, 6, 10 insurance policies in place, right? For this one, this is a new restaurant
Okay.
that's going to be, new owners for a restaurant that already exists
Mhm.
in Highlands, New Jersey. It's
Okay.
actually a bar entertainment venue called the Chubby Pickle. So I'm working with the owners. There's 1, 2, 3, 4, 5. We have 7 insurance policies
Wow.
getting put in place for them
Right.
to make sure that they're protected, the employees are
covered.
protected, the property is protected,
Yeah.
and the investors are protected. So we're going to make sure that everybody is well encased,
Right.
in a good, solid insurance program. But
Absolutely.
are there other things we could do? Yes, but we don't want to make it $100,000,
Right.
right? We
Absolutely.
want to keep it within a nice, affordable range, but make sure it's robust enough so that everybody's comfortable, right?
Right.
We want to sleep at night knowing that if it hits the fan, we can call Aaron and let's put a claim in and make sure that that's going to be covered. I think is
And
important.
get it done.
Yeah.
Yeah. One of the reasons why I use Luxury Group is, and it's probably been 20 plus years, I've been doing this, is that same thing you just said, the personalization. When I have insurance, it's, hey, here are the things that you need.
Mm-hmm.
And you kind of pick it like when you're going to a restaurant. Hey, I would like this, this, and this because I want to eat this. I want the appetizer, I want the main course, and I want the dessert. And it's
Right.
like, these are all the things that you can have. What are you really going to need and what are you going to really use at the end of the day? Right. So when I look at that, that's what you do with the clients,
Mm-hmm.
right? Now, let's, that client, you're definitely going to have a great time and I'm going to wish you the success on that.
Thank you.
That's a nice deal. What happens a year later? What happens 2 years later? Walk me through that process.
Yeah, it depends on the type of client and the size of the business,
Okay.
right? If it's a regular small single homeowners monoline policy, they're going to get an automated renewal,
Okay.
right? And if an automated renewal only goes up by 10%, it's going to get flagged in our automation
Okay.
that renew as is. It's not
Got
going to trigger,
it. Okay.
right? Because it's, again, we have to categorize clients by the type and value of the client. That single policy is not going to get flagged for that personal touch.
Okay.
If that client needs a personal touch and they want to reach out for additional conversations, that's always available.
They should. Okay.
Right? We don't turn that away.
Mhm.
But if if you've got 3 or 4 policies, well, we're going to have a phone call. We're going to have
Okay.
that conversation.
Got it.
And depending on how big it is, we want to meet in person, right? If it's going to be a significant amount of premium dollars in revenue, we try to meet in person every year or twice a year and stay in touch more consistently.
I love that, and I'm going to call it the old school effect. It's that belly to belly, that face to face. Let's sit down.
Can't
Let's
do it
shake
for everybody
hands.
though.
Yeah, yeah. No, not for
I
everybody.
can't do it for everybody.
But when it comes to, like you said, you have 4 or 5 policies.
Right.
It makes sense, right?
Right.
Someone
You
who
have a lot of
just
moving parts.
a lot of moving parts, and again, it comes to that personalization.
Yeah.
Being in the real estate, and you have 10, 15 houses, you want to make sure you're covered.
Right.
I give you a story. I didn't use Luxury Group one time. Okay, went to someone else for a cheaper premium,
Mm-hmm.
and got burnt. Right, and I got burnt because the policy was for a vacant building. We had a pipe burst, and the pipe wasn't covered. They told me it was only a fire policy. So now I'm upset because you and I would have had the conversation. Hey, you could
Right.
go with this policy,
Right.
but let me just let you know, in the case that something happens, you're not going to be covered for a plumbing issue. You're not going to be covered for these things.
There's always a cheaper policy out there. And I tell that to people all the time. I tell people 2 things. One, I'm never going to be the cheapest
Okay.
because I don't want to be the cheapest.
Never.
We're going to find good, affordable policies,
Yes.
right? And I'm going to be lazy.
Okay.
I'm going to be lazy because I want to do it right the first time.
Got it. Okay.
I don't want to fake it and have to fix it,
Right.
right? I want to get the right information and let's do it right once and not have to do it twice.
Got it.
Because then it gets more expensive for me to have to do things twice.
Absolutely.
So, and I use the word lazy. I say it in jest because it's like, all right, let's tell a joke here.
Right.
I want to be lazy, but I only want to do it once. I don't want to do it twice.
Yeah, absolutely.
Right?
Yeah,
I
you
can't
wanna
charge.
take your
If I
time.
charge you twice, I still only get paid once.
Once. Yeah, that's the truth of the matter. So let's talk about you talked about some incredible things at the beginning, and congratulations on, I would say, the nonprofit things that you're doing, which you're a true educator. which means you're not just an educator, you're a mentor. You
Mm-hmm.
know, you're teaching others who may want to get in the space of insurance on how to conduct business,
Right.
how to treat your clients, and how to maneuver. Um, and with you going on stage, when is that event? Like how can we see it? What is
We're not broadcasting that live, but you
okay.
can, watch my Instagram stories because hopefully somebody will have a phone and snap some pictures. But
Okay.
we'll put some stuff on stories. But that's June 9th. So that's coming up right away based on our recording date today. So I don't think this is getting out in time anyway.
Yeah, we'll probably have it right after the week of that,
Yeah.
but it's important. Let's give them your Instagram handle. I think that's important for everybody as they're watching the podcast that they can take a look and look you up and find you, because I'm sure after they see some of these clips and see this information that you presented, they're going to want to call you.
Yeah, so Luxury Group INS is our Instagram. The podcast that I host is Who You Work With Matters. Instagram is the easiest place to find us, or if you want to look up some Santi's episode on the Who You Work With Matters podcast, you can go check that out. You can check it out at my personal website, which is theaaronlevine.com. That's also my personal Instagram. I own that everywhere. I own the Aaron Levine,
You are the
across
man.
across the networks.
That's copywritten.
I should.
Definitely
Got to
should. I mean,
trademark it.
yeah, you should trademark that. That would be fantastic. Listen, we're about to get ready to wrap up. Anything you want to talk about before? I mean, we're definitely going to have to do this like probably in another 6 months. Do part 3. Engage again. But anything you want to tell the viewers? Anything else you want to bring up?
Yeah, just work with trusted professionals, I think, is the most important thing, right? You've got to trust and like whoever you're going to be working with. The fact that you called me an educator before, I like that because that's important to me. I
Absolutely.
like helping people across multiple platforms, whether it's insurance or real estate or anything that they're doing. I have so much experience in
Yeah.
businesses and business in general. I just love being able to have, qualified and great conversations like these. And it's even better when there's a microphone in front of our face because then it gets recorded and then we get to share it with even more people. So I was pumped to be able to come down to the studio today, and
Yeah.
thank you so much for having me.
No, thank you for coming on. This was fantastic. Had a lot of fun. And we'll do it again soon. Bye to everyone. We'll see you on the next one.